Hi, it's Lee, and welcome to the Tesla Economist. Now, I'd put myself out there as one of the investors in the community who has felt some serious extremes with being a Tesla investor. From managing 8 figures worth of Tesla at once, it had quickly become a significant proportion of my family's wealth. One day, we made over $1.5 million, for example. It was extreme. And we weren't alone. There was a community of us all who had similar returns and held onto it through the highs. On top of that, it was even more extreme when you're doing this with call options and making 600% returns in just months. Some I bought during the COVID dip were well over 1,000% return when I exercised them. The problem is that because it grew so much, it then had too much impact on my family's net worth. And as it was so volatile, there were certainly bad times. But I'd always felt it was fine in the long run, as Tesla had so much demand, and there was so much margin, and FSD could be solved next year. And Tesla had a new manufacturing technique that would significantly lower COGS, with lower cost, higher energy dense cells. So there was nothing to worry about in the long run. Except, as we know, those future plans are still not here yet, along with demand not as high as it once was, and we're only now finally getting the Cybertruck. And that's just Tesla time. These things take 3 years longer, but they always get there eventually, albeit late. And Elon always says this too, and he uses his antidote about how he used to be late for the bus at school. So there's more evidence that Tesla does come through when we see the Cybertruck. So perhaps the market will have more faith in the rest of the things we expect, albeit perhaps late. Which it looks like the Gen 3 vehicle will also likely be later than we hoped, with the rate that Mexico is taking. However, a lot of the hyperballs will tell you it will be out early because they're building it in Texas. But it sounds likely that this is only a pilot line. But I guess it's still good that they practice building the car or refining the manufacturing process as early as possible. And perhaps the bottleneck is eventually the batteries, rather than the car line in Mexico, or maybe Berlin now. Or whatever, we just may not know. But Elon was saying it was due to the economy, yet basically we'll still try and break ground sometime next year. We know that there is a foreseeable path of perhaps 7 million vehicles a year for Tesla. Elon's only given us the first 7 or 8 million, and he hasn't told us anything about what the next 12 million or so models will be. But presumably, most hyperballs will just say robotaxis. And perhaps that also is what Tesla are waiting for. FSD perhaps, for the Gen 3. Like I said, we just don't know. But from an investing standpoint, is now a good time to be buying Tesla? Well, I recently posted an observation that the stock price is still only where it was 3 years ago. And it was pretty overvalued back then because so much of the 4680 related items haven't gone to plan. But now we don't need them to progress. Gen 3 can use LFP cells, so 4680 isn't necessary. And we have some idea of how fast CATL can build 80 gigawatt hour a year capacity factories, probably around 12 months or so. Outside of China, like Texas or Mexico, it could take quite a bit longer. Without 4680, that would kind of be the fastest rate Tesla could grow, as the EV and energy business is basically a way of selling big batteries attached to an application. The batteries have to come from somewhere. Anyway, one of the things with Tesla is that I think EVs will vary in demand. Sometimes demand will be high, sometimes it'll be low, for whatever the reasons. Perhaps more people will move to electric and realize it's a superior drive, or prices will come down with some breakthroughs, or gas prices get too high, or interest rates get lower, or Tesla starts to advertise. If any of these events occur, then Tesla is a bet on any of them. So demand for Teslas would rise, and then it wouldn't take too much longer for Tesla to be making $10,000 profit per unit sold again, or possibly more. But when Tesla make 5 million units a year, then that's $50 billion profit, just on EV sales alone. And there'll be times when, for whatever reason, Tesla's P ratio will be higher, and other times it will be lower. But most likely somewhere between 50 to 80, And this tends to be about the general fluctuation over a year. So if you can time the $50 billion profit earnings with a high PE, then you'd be at a valuation of a few $1 trillion, quite possibly, especially with everything else Tesla has going for it. Those earnings aren't that difficult, at least over several years. The thing is, with this investment, is Tesla time. How slow is it really? In case you didn't know, but now even the hyperbulls are no longer predicting 20 million a year by 2030. I think they're mostly pushing it back to 2032 now. But to me, the only way they could even do it by 2032 would still be with 4680 factories, and the ramp of those is anyone's guess still. With high energy dense cells, there is far more demand, and if the price actually costs less, allegedly, according to Elon, about 30% less than LFP cells, yet more energy dense than 2170, apparently, judging by these new cyber cells, which basically get as much energy density as a 2170 cell, only without using silicon in the anode. And if Tesla has FSD, which is actually not baked into the price as much as I thought, according to a poll I ran, I expected that with the PE ratio as high as it is today, that more FSD was priced in. I guess low margins that we expect to come back are perhaps baked in as well, along with the inevitable growth of Tesla adding a new model, aside from the Cybertruck. The Cybertruck being a vehicle that has set the bar much lower in expectation as far as production is concerned, with volume production targets being pushed back from the end of next year to sometime in the following year. There are other various aspects of the business that are like lottery tickets, like the bots, but who knows? Tesla lead the way in the scalable, most useful bot for your home or business. So if there's ever a robot bubble, then Tesla's stock price would benefit huge from that, just like how Tesla's stock price may also ride the AI bubble too. These are various events that could always make Tesla bubble to perhaps $2 or $3 trillion because it has a foot in a certain industry, and it could be a big element to it. Like bots, for example, it's unlikely that many other companies can secure enough cells or batteries to power the bots. And if Tesla were able to make 4680s to the level we hoped, then they would have the best batteries for the bots. Along with, of course, all the technology from FSD, and then whatever it learns with AI. But Tesla's main AI bet is Dojo, the AI training system for neural nets, which has major potential if it can do what some people suggest. The applications could be massive. But again, not much of this is priced in either. Tesla is still just mainly a car company. A car company in revenue, profits, and valuation. Yet it still has a PE ratio like a high-tech growth company. What I'm saying is the market is probably putting about a PE ratio of 50 to 60 just on the EV business right now. Likely because it knows when rates are lower, profits should double. And that should be the equivalent of a PE ratio of 25, which does sound like a good price. And that's what eventually long-term investors expect to happen. That eventually Tesla will have lower COGS and higher demand, and we will see about $10,000 profit per unit again. And like I said, Tesla's demand could always increase for a plethora of reasons. So I'd say that perhaps only about $50 of the stock price currently is for the non-EV side of the business, even including megapacks. I think this depends on the energy that investors have about the company. Sometimes it feels more believable that Tesla will solve FSD and ramp up more EVs, etc. Whereas at other times it feels like it's going to take a lot longer. This sentiment is very fickle and affects the stock price considerably. But sometimes Tesla's valuation just seems to be all over the place, as it doesn't yet have a core value to base itself. Some analysts suddenly say something or arbitrarily changes their price target, and suddenly the stock runs or drops, when nothing internal has changed in the company or the industry, just someone's opinion of the day who has less invested in the company than any of us, or potentially some stock manipulation. Because the market is still trying to work out what Tesla is. But in reality, from a fundamental standpoint, it's more about what it can be and how soon. Yes, there are still all these great things that Tesla are working on that truly are worth trillions if solved or scaled. The question really is, can Tesla solve them next year, or 3 years, or 10 years? But also remember at the same time that no one else is further ahead in these areas too. And if you think self-driving cars or robots are inevitably going to be in the future, then Tesla is leading the way. We just don't know when that future is. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.